Today in crypto. Bitcoin, BTC, price plunged by about $3,400 in an hour, warning traders that corrections during a parabolic move are likely to be sharp. Data from Glassnode shows that the fall resulted in the liquidation of Bitcoin futures long positions worth about $190 million on Binance within an hour, the largest to date. In a strong uptrend, corrections are swift but short-lived because investors who expect the rally to continue use the dips to buy. Continue reading on Cointelegraph. Ethereum has gained some parabolic momentum over the past couple of days, which has put a firm end to the phase of consolidation and underperformance against BTC that previously plagued its price action. The cryptocurrency is now back above $1,000 following its trading up just over 7% at its current price of $1,050. This marks a notable upswing from recent lows of $720 and a slight decline from daily highs of $1,170. Where the market trends next will undoubtedly depend largely on Bitcoin and whether or not it can continue consolidating above $30,000. ETH did drop as low as $890 overnight, but the buying pressure here proved immense and helped spark its rebound. One trader that he is cautious with Ethereum's present outlook, noting that the strong overnight rejection and high funding rates could indicate that this move will be sold into. In just 48 hours, Ethereum rocketed over 50% from $770 to soars to a new all-time high. Although it is hard to argue that 2020 was the year of Bitcoin, Ethereum outperformed the top cryptocurrency market. But since Bitcoin turned bullish, the tool has been less effective for calling tops or bottoms. Will the formerly flawless trend change predictor fail at calling a reversal in Ethereum, just as it did for the first ever cryptocurrency? With the declared intent of reducing risk, the moves look to cut new investors off from opportunities to get out of the ruble. Beginning investors in Russia will soon find themselves with fewer options to beat plummeting interest rates offered at Russian savings accounts. In addition to the investors themselves, the big losers are likely to be trading apps like Robinhood, which aim at first-timers. For a December 30 announcement, the Central Bank of Russia is working to get securities trading platforms to toe the line on risk reduction measures first passed in July. In the latest announcement, the CBR recommends securities platforms and applications have systems to secure the impossibility of executing on platform trades resulting in the acquisition of stocks or other securities from foreign issuers by unqualified investors, except those approved by the CBR. The CBR is likewise working to stop firms from offering complicated investment products, a term that largely lines up with leveraged trading or derivatives, to unqualified investors unless the firms offering those investments provide guaranteed returns of at least 2/3 of the central bank's key rate. With the key rate at 4.25% currently, platforms would need to guarantee 2.83% returns. There are major doubts that the actual intention is to protect investors. While 4.5% would be enviable for a U.S. savings account, the ruble's instability since sanctions in 2014 and, more recently, the market crash in March 2020 has driven huge numbers of investors to the stock market for the first time. In October, the CBR similarly issued guidance to limit unqualified investors from purchasing more than 600,000 rubles, as of publication, just over $8,000 US dollars, worth of crypto in the year. That guidance was part of an explanation of the country's law on digital financial assets, which came into effect as of the new year. Bitcoin, BTC, has consistently been hitting new all-time highs over the weekend, but the latest surge has also created a new high against gold, according to MarketWatch data. This suggests that Bitcoin has been gaining acceptance as the new store of value and that may attract more customers away from gold into Bitcoin. Analysts suggest that the latest rally above $30,000 could have been triggered by aggressive buying from institutional investors on Coinbase, as suggested by the large premium of about $350 compared to the price in Binance. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.